Hi everyone, my name is Piterpakulski. Today we will continue building financial model as a rent calculator for your business idea. Today we have a big topic. Today we will be building cash flow statement. Finally, we need to know what are the revenues, what is the cash balance inside the timeline of our business idea. Later we will face questions like how much financing we need, what is the payback period, and for all these questions we need to have our cash flow statement be done. So maybe this video will be useful for you. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. And now let's start building the cash flow. So cash flow statement is 100% automized statement. We don't put any data manually inside of it. So we just plug all the revenues, all the expenses from the lines above. And we have to be very attentive when we are building. So let's start doing it. So I will create a timeline for just a moment, let me delete it. I will use this one. So this will be our timeline, cash flow statement, cash flow statement, so now you will be able to see that I'm not putting any manual data inside the cash flow statement, because when we start creating scenarios we will have to we need this statement be automatic. If we are putting the data manually inside the cash flow statement, we will forget to displace the revenues, expenses. Then that's why you will make mistakes. And to avoid mistakes, you need to calculate first of all revenue inflows, expenses outflows, and then put them inside this statement. So first of all, we start with revenues. So we are taking the revenues green from, so green lines are our other lines that we will be plugging here. I'm creating totals. Now I will extrapolate this formula to the whole of our timeline. Then we create the line for direct expenses. And I will be going from top of the model to the bottom. So this is, I'm searching for red lines like this. So this is the investment plan. I don't need this at the moment. So these are direct expenses. I'm putting these lines into the cash flow statement. The next We also have these direct expenses which are inside the average check. We also have another group of direct expenses, I'm sorry for it, customers. So we've just mapped this group of direct expenses. Then advertising campaign at the start, we will place all these expenses inside the investment stage or inside fixed expenses. Marketing and advertising, so we will be putting these expenses inside direct cost, because they depend on how many new customers we are going to attract to our project. So direct expenses on marketing and advertising, I'm adding these expenses here. So this group of direct expenses lives inside every check. These direct expenses are linked to the amount of customers, new customers. Then we also have another group of direct expenses that are linked to the amount of customers at any given moment inside our project. So advertising, so we've just mapped these expenses. Direct payroll we will place it inside the payroll a little bit later. Direct expenses per one customer, so we have direct expenses item, we are adding these expenses. So now we have to extrapolate these formulas.
In any data, we just mapping all the data from the lines that we've calculated above: the revenues, direct expenses, fixed expenses, payroll, investment plans, and so on. So then
direct expenses, then we are moving to payroll. We're moving to payroll, and we have two types of payroll: fixed payroll and direct payroll. So we are moving back. Fixed cost, this is stable payroll, and this payroll is direct. So payroll, direct payroll, I will map from this table. And also we have stable payroll, fixed payroll, stable position, just a moment, direct position, and Now we are extrapolating these formulas to the right. Now I'm gonna create totals for payroll. Now we'll extrapolate these formulas to the right. Then let me by the way group the data outline group. Then we are moving to fixed expenses. Fixed expenses. So we are going up and moving from top to the bottom. So here we will place rent expenses, deposit and rent payments. Then rent expenses, investment plan we are skipping. Then revenues, direct expenses, advertising campaign at the start, advertising campaign at the start, advertising campaign then direct payroll, stable payroll, direct expenses, fixed expenses. So here we go with fixed expenses. Now let's go from top to the bottom and see. So we can press formulas, trace dependencies to see. Oh, we didn't extrapolate the data. Let me just extrapolate it to make us see that we've plugged all main expenses here. So we will group these expenses. Data group. Then we go up and we need to check whether we mapped all the expenses and revenues. So trace dependencies, they participate in the cash flow. Trace dependencies, they participate. Investment plan we didn't cover yet. Then what else? So I'm searching for red lines and green lines. So these revenues are without. Let's just hide it. Data group, direct expenses, formulas, trace dependencies, they participate in cash flow statement. Advertising, trace dependencies, participates. This block of input, direct expenses on marketing, advertising, trace dependencies, participates. Direct expenses per customer, direct payroll, participates. Stable payroll, participates also. Direct expenses per one customer, participates. Then fixed expenses participate. Revenues, trace dependencies, participate. So now we can move to taxes. So first of all, we will extrapolate these formulas to the right. Then we are moving to taxes. We will group this block of expenses, data group, and we have, let's create a small block of inputs here for taxes. Sorry guys if you see the hear the noise of a firefighter's car, because that's New York City. Sorry for that. So here we will describe the inputs for taxes, tax, then rate. So here I will create a new block of inputs. So revenue tax, profit tax, salary tax, asset tax, and here these are the inputs. So we color them with blue color. So revenue tax, let's assume it will be 4% of revenue, so these will be percentages. So here, for example, you can take 4% of revenue, 15%. The rate of profit tax will be 15%. Salary tax, for example, can be 20%. Asset tax, we will pay, for example, $4,000 monthly. Then so we are adding these taxes in our block of taxes inside the cash flow statement. So revenue tax, we are adding the rate for the revenue to calculate the revenue tax. Profit tax we will do a little bit later, because we need to have we need to map our principal payments and interest payments for the loan. Then salary tax, we take payroll and multiply it on the salary tax rate. Then asset tax, we are taking this value of the tax and multiply it on the line where we do have or don't have an operating activity at this moment, at any given time inside the timeline. Here it is, operating activity. So 0 means that we don't have operating activity at this moment. 1 means that we do have operating activity at this moment. So then I press enter, so I will create totals for the taxes. I'm sorry, I will also extrapolate this data. Then taxes, then I create a new line called result from operating activity. So this is the first important line of our project, to see how our business idea breathes without external debt payments, like interest payment, principal payments, loan payments, and so on. So this is the first important line. So I'm just taking revenues minus direct expenses minus payroll minus fixed expenses minus taxes. Now I'm extrapolating this formula to the right. Then I'm gonna plug investment plan. So I'm pressing equals, and we have the investment plan here. Let me just double check. So we don't have any extra investment plans here. Stable, direct expenses, fixed. No, we don't have. So this is our investment plan. So now I'm creating total from this group of lines. Now then the next step, I will extrapolate it. Then I will create the line called result from investment activity. So this is the second main line inside the cash flow statement. After a result from operating activity, we create the result from investment activity. We press minus and take with an opposite side the total of this line, because investments are outflows. Then we are moving to, so let's hide it, data group, then we create a line equity. Maybe this will be the only line for inputs inside the cash flow statement. Then I'm adding loan, inflow of loan. Then I'm adding principal payments. Then I'm adding interest payments. Then I will extrapolate these formulas to the right. So as you can see, we don't put anything manually inside the cash flow statement. Even equity will be automized. I will show you during the next videos how you can do that. So now we can calculate profit tax. I will write a formula. So if this value minus this minus this minus this minus revenue tax minus salary tax minus asset tax minus principal payments minus interest payments is more than 0, if we have a profit, then we will multiply. Okay, if this story is more than 0, then we take this story and multiply it on the profit tax rate, and we are freezing this cell with the rate of profit tax. Otherwise we put here a 0, and we are closing brackets. Now I will extrapolate this formula to the right. Now we can also group these taxes, data group. Now we will create the third most important line called result from financing activity. So this is also a yellow line. So we will take our money or our business partner money or investors money plus loan minus interest, principal payments minus interest payments. So we'd better do it this way: this plus this minus this minus this. So then we are creating the line called cash balance at the beginning of the period, and the last line of cash flow statement will be cash balance at the end of the period. This will be the end of cash flow statement. Cash balance at the beginning here will be 0. Cash balance at the end of the period will be the sum of this line, this line, this line, plus cash balance at the beginning of the period. Then I'm putting this value here. Then I extrapolate this formula to the right, so it sums this plus takes the cash balance from the previous month. So we have a cumulating story here, cumulative balance. And now I will just have to extrapolate these formulas, two formulas to the right. So now we have our cash flow statement done, and now we can finally play with inputs. The next video will be devoted to answering to one of the first very simple questions: how much financing we need. Then we will answer the question what is the payback period, and so on. So maybe this video was useful for you. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.